I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this jam-packed show. Well, the stock market chopped widely this week as the 18-month trend of strong upward surges and mild setbacks continues. Monday and Tuesday saw upside gaps fail as aggressive selling hit the tape both days, and from peak to trough, they fell about 1.5%. Big declines on those days, something we haven't really seen lately. Wednesday and Thursday, well, just the opposite. Morning lows brought buyers in, and there were gains of about 1% off of those lows. And the indexes now seem trapped between historic valuations and growing talk of declines of 10% or 20% as a correction or a bear market could hit, and technical support, where traders are looking at an uptrend that has been around for quite a while unabated. And that kind of leaves the range in the S&P 500 at about 4550 on the peak and 4400 on the bottom, though it is moving towards those bottom levels quickly. News early in the week, well, China remains the big news, as there are huge negatives coming from that, as the second largest economy teeters from government crackdowns on techs and now gaming as they move to regulate Macau. Las Vegas Sands down about 10% on the week, and wind down about 17%. It's been a bad week for that sector. And the huge issue is Evergrande, which is their big company. In fact, the company is huge. It's in the top 500 in the world. And that's in the real estate business and more, as they've expanded in a huge way. And that's really the problem, is they have over $300 billion in bonds out there that are essentially collapsing, trading at 40 or 50 or 60% of par value. And the default threats are building there, and they're trying to sell assets to cover their debts, but they're having trouble selling the assets. Also, it's one of the largest economies as a world businesses, I say, and they employ like 200,000 people, and supposedly their company supports jobs of about 3.8 million people. And this, of course, is a product of central bank insanity. China has been right up there with the rest of the world, and you got to ask, and people are asking, is this their Lehman moment? Analysts don't really think so, because the U.S. banks don't seem to be that exposed, and that company doesn't have a huge market share compared to how Lehman did. So I don't. The analysts are saying that the markets probably won't react that big, though we're seeing downticks on the news in China, and China put in a huge liquidity injection today. But it doesn't really matter. Iron ore is collapsing with the material stocks on that news, and those material stock declines are leading the way in the U.S. stock market today, which has turned pretty weak as I'm doing this show right now around midday. Also riling the markets from China was the breakup of Alipay and, of course, the Ant Group and Jack Ma. That has been a big problem for them. And simply, if you look at China, what they're doing, the free markets got away from them, and they don't like it. So they're grabbing the power back. And also, I believe, trying to do something that the U.S. isn't really doing, and it's trying to stem the potential downside risk from all of the excesses that have been going on there, but their excesses are giant. They have, I don't even know how many tens of thousands of empty condos just sitting there, and it's been a disaster waiting to happen, and maybe that's what's going on right now. Also, Apple put some downside pressure on the markets this week. A week ago on Friday, they lost a very key court case, which means that the developers that use their app market, they can put external links there now. And that means that Apple doesn't get their cut. Of course, that's going to hurt margins or also hurt earnings. And Apple's been headed to the downside ever since. They came out with their iPhone 13 release, and it was no biggie at all. Actually, on our analysis, we see the stock having a couple of weeks of downside risk, and that stock could be heading to 140. And of course, that will weigh on the markets if that happens. There was good news, however, during the week, and I don't want to avoid that, as the market did get lift on Wednesday and Thursday. And one of the reasons was Microsoft, which has just been doing a bang-up job, came out with news of a $60 billion buyback increase. And retail sales were a huge surprise, as they were expected to fall by 0.7%. They gained by 0.7%, as all of that money that the government poured into the hands of the public out there must be starting to get spent, or at least improving on that. So now, as the stock market pulls back and hits short-term support, so many traders that write to me, and lots of chatter out on social media, sees another 2.5% to 3% pullback here in the indexes, setting up another move to all-time highs. And yes, those positive trends are still in place, mostly. But the short-term momentum has now neutralized in the S&P 500. I'm going to show you lots of this going forward in this show. Same thing happened in the Russell, and maybe worse is the real giant stocks in this country, those that are in the Dow Jones Industrial Average, well, they have now switched to negative momentum on the short term and the intermediate term. For short term, it's the first time since February that we're getting those negative readings, and that is a warning, and I'm going to show you more about that later in the show. My experience and my gut tells me that these consistent positive visuals we're seeing in the charts that everybody sees in this uptrend is going to end soon. The obvious often becomes the surprise. I've seen that 47 years as a trader in these markets, and I'm going to show you in the short-term view how that could happen if it is happening. And there are signs that the stock market is changing right now. And I will show you that as we look at the Dow Jones Industrial Average momentum conditions. And those changes are not for the better. So while I've been talking about the potential for a peak here, a major peak in this year, and it's coming a little later than I originally thought, I still think it's coming. Stocks for the week, really small changes in the indexes, but it's starting to get worse as here at midday, the stock market on its lows, with the S&P 500 down about 34 points. So accelerating to the downside and having a very difficult time picking up, getting weighed down by those material stocks with the big break in iron ore, and also the Apple moving to the downside and other techs weighing on the market. And the index that is the biggest down for the day is the NASDAQ, over 1% so far on the day. Bonds 30 years. This was an interesting mixed week, as the 30 years are around unchanged, but 10 years were down. And the 10 to 30 yield curve moved out by 5 basis points. What we see in here is short end weakness coming in as the threat of a Fed taper or policy changes, and the threats of that really around the world, just as that kind of chatter is picking up, the short end is getting weaker in here. Overall, that tends to be better for the bank stocks, but they're getting caught up in this downside whirlwind at the moment. Also, though, they may have a trading opportunity coming up. Gold, this is the second week of big losses, down over $30 on the week. Silver down about $1.25, and silver, there's a breakdown pending, and these are very, very bad charts. I'm going to show you big picture analysis on the gold market because I've gotten lots of questions about that, and that's coming up shortly also. Dollar up about 0.3% on the week as some money moves into there on a safety bid. We think it'll have a small little dip, but then I think it's going to be moving up again. And there's a lot of negativity out there on the dollar, but I think that's going to be wrong. Oil, that gains about $1.40 on the week. We think 1 or 2 weeks of a minor pullback in there, and then up again. A lot of these futures that I'm talking about right now, you can see our analysis on all of them. Future Speak show on Wednesday for level 2, 3, and 4 members does bring you my analysis weekly and daily on 26 different contracts. So it's one of the most comprehensive videos you can ever see, and you only need to be a level 2 member to be able to see that. So in this jam-packed show we have right now, coming up, you're going to get a preview on the international market member video where we look at the Australian market and the French market. Also, you're going to get my big picture analysis on natural gas and the gold market. And we're going to take this, a short-term and intermediate-term view on the stock market coming up at the end of the show. So we have tons of stuff coming in here, and I think you're going to find this show pretty amazing. Please do remember to go to our website, askSlim.com, and explore that site. If you're new to askSlim, you can become a free member and learn about some of the things that we do. If you're watching this on YouTube, please do subscribe to that channel. Click the notification bell, and you're going to get all of the notifications when we put up a lot of videos that we put up during the week. And make sure you give us a thumbs up on this show, because that does help us. So like this video. On Twitter, follow us at askSlim. If you have questions about the memberships information I'm going to send you about a huge offerings of education and analysis on the financial markets, you could write to Matt at askSlim.com. I want to remind you, for those people that want to get a real taste of what we do, you could become a level 1 member. Right now, 3 months is about half price. So you can get all of the things that you see on this. You can write to Matt at askSlim.com for questions on that, and for just $30 for 3 months, $10 a month for some of the most unbelievable analysis and reports that you're going to get every single week that you can see right here. And you can use our Slimulator Momentum Tracker, which is by far the best app you'll ever see out there for intermediate and longer term position trading and investors. So fantastic information. You'll also be able to get our special videos. So sign up for level 1. All right, we're going to get to our international market preview here. This we look at usually 2 different symbols that we offer out of in the international markets, 11 different countries that we analyze. RV, an expert in cycle analysis, brings this to you every single week, this preview, either international markets or some particular stock sectors, and then our members get the whole video. We're going to show you right now this video on the Australian market, the ASX, and the France CAC 40. So you'll be able to see this great analysis and get a very good taste for the style of the analysis that we do. Here is RV, our great cycle analyst.
Okay, so this is the S&P ASX 200 weekly cycle chart. These charts are all built on TradingView. For the ASX 200, as we've had for many, many weeks, we have a dominant weekly cycle here, which is broken up into these minor half cycles, which means that there is a key dominant money flow pattern in play, which is then further broken up into minor money flow patterns. And these are overall really quite clear. You can see here we had 2 cycles pushing up, with the dominant cycle pushing up as well as the minor. And we had the rally here, then we had the pullback right here to form the mid-cycle low, the rally off of the mid-cycle low, and then the very modest pullback to complete this dominant cycle. Now, the fact that this pullback right here was so modest is really an indication of strength. And you can see what happened after that point, of course, is that we blasted off on the upside and are forming one more, what we would call swamp cycle, where we've used up this whole dominant cycle basically rallying. It leaves a short window of time for a pullback prior to likely moving back to new swing highs. You can see we have a rollover to the downside in our weekly momentum. Now, this is indicating that we have likely formed a high for this dominant cycle and are entering into this corrective period that I have mentioned here. On the downside, we have an intermediate support zone coming in around 72.56 to 71.40 or so. That's really what we're looking for on the downside here, prior to likely pushing back to new swing highs in this next rising phase that goes out into early 2022. So this is a very positive longer term pattern and is in a window of time period here for some downside risk. If we look at the daily chart, we have modified these cycles here. We have widened them just a little bit and then shifted them to the right. The rationale behind that is that we had this sell-off right here that then quickly turned back up. That really told us that a bottom had likely formed just a little bit late. Based on this blue cycle that we have on this chart here, we're in a short-term rising phase. Now, you can see we have these green arrows. These green arrows indicate positive cycles with higher cycle highs and higher cycle lows throughout this entire time period in this really nice uptrending channel that you can see visually here. If we draw a simple channel, you can see that just really tracing out this channel really very clearly. So currently we are at the base of that channel and really looking for a bit of a rally. Now, given where we are in our weekly cycle, which is very late, and when you get late in cycles, that's where there's risk for money flows to come out and for sell-offs on the downside, we would look for this rising phase to fail relatively early and then get into a corrective period. Now, if I modify this cycle chart here, just move to the right a bit, you can see that we have our next daily low due around early November. And if I go back to the weekly chart, that is very much in line with the forecasted timing. The forecasted low is due 9/13 to 11/1. So really in line with a key low that would likely form in early November. So that's the overall picture here in the S&P ASX 200. Watch for this to form a flag and then to get a breakdown below this key daily cycle low here. The key daily cycle low is at 73.44, so that will be what we are looking for here in the S&P ASX 200. This is the CAC 40. So what I've added in here are these green and red arrows. A green arrow is when you have a bullish upturn in the weekly momentum, and a red arrow is when you have a bearish downturn in the weekly momentum. So you can see that we had this rising phase here. We were really chopping our way higher, and then we had this fairly decent and meaningful failure right there versus this intermediate 61.8 to the major 161 between 67.78 to 70.72, and now we have a bearish downturn in the weekly momentum. What that says is it's really putting us on watch for whether this rising phase is now over and we're in this corrective period, which goes out into the end of the year. If we look at the daily chart, you can see why we are getting more bearish here is we have a breakdown in the CAC 40. We have modified these cycles just very slightly, making the dominant two bars wider. You can see that we had a very muted rally and then likely an early breakdown. We have a negative slim ribbon, so it'll be very important for us to stay below that cycle high at 67.22 and hold this bearish slim ribbon. If that were to happen, this is what we would call a left-hand translation, where a high forms early in the cycle and we are in this corrective period out on the dominant, which if I move over to the right here, it goes all the way out into early November. So this is something that we are watching very closely, a bearish setup here in the CAC 40, and really overall looking for a move down to this intermediate 61.8 at 64.50 or so. So a bearish look here in the CAC 40.
All right, great job on that, RV. Remember, if you're not a level 2, 3, or 4 member, you can become that or write to Matt for just level 2 if you want. And he'll send you a first time discount to be able to watch this entire video. And of course, all of our videos in our huge library, over 600 of them in there right now. So please do write Matt at askSlim.com. All right, now what we're going to do is we're going to move into, I think, a very important section. This is big picture analysis. I'm going to use our level 4 charts, and this is a special that I'm showing some of these on natural gas and gold. We're running a special on our level 4 memberships right now. So the charts that I'm showing right now are available to level 4 and level 4 plus. I'll tell you a little bit more about that moving forward. So what we're going to start out with is looking at natural gas, and we're going to look at a a weekly chart of natural gas in here. And looking back in here a couple of years, as you can see. And we're looking at cycle analysis. For those of you that just saw Arvy's show, you saw him using that also. And what we look at are cyclical patterns in here. These are the movements in the market that are rhythmic. And each of these brackets essentially give you the guide to the ideal cycle lengths. In this case, we're looking at cycles that are very, very long in duration, and we'll call this the dominant and the intermediate and minor cycles when we look at this particular harmonic family. You can see in here the low, the halfway low right over here, the quarter low right here, as you could see that. And then, because this is so bullishly configured, it began to move up. There is a lot going on in the natural gas market right now. A huge spike to the upside, and it's pulling back some right now for several reasons. First of all, Hurricane Ida took a lot of energy offline, which about 28% is still offline. There's expected huge demand that is going on now because of a potential for a cold winter that they're looking at, especially in Europe. And Europe really has an energy crisis. Natural gas energy inventories, they've been maybe never as low as they are right now. As far as records look back, people can't find any period where the inventories are lower, and European demand is actually going up. And there's that has been really sending the markets to the upside in a very strong way. There's a pipeline coming out of Russia that hasn't been put online yet, and there could be help from this and get prices to be moving down again. Once that comes online, also the prices go up. Production generally goes up around the world, and this rally could stop in a couple of months, and I'll show you a bigger picture. In the meantime, the upside potentials in here are pretty high. As you can see, these what we call fib extensions that come off of these cycles back here point up to, well, first of all, this level where it stalled right there is the 161, and the 261 is up here at around 670, and then the 423 is up here over $7. So there's a potential, and you can see us putting those in there in our projections for this to get up to some significantly higher levels in there. So that's a look at the charts on the weekly. I'm going to switch over now and put up the chart on the monthly, and this is very significant. You can see that there was a huge squeeze back in 05, 06, 08 even, where the prices got up into the teens in natural gas. But since then, the cyclicality, as you can see, has been really good. As you can see, the low here and here and here and here. It's been beautiful with the dominant cycle and minor cycles really lining up very well. You can see it here as I zoom in that an important low was done right over here. Now what's important to see is that most of these cycles, the first cycle is the biggest spike, the first minor cycle within this harmonic family. Same thing happened right in here, and then a smaller spike on the minor rally. You can see the same thing here and here. This one actually got to a higher high. So where are we now in this current harmonic family that we see right now? Well, we're still moving up, but maybe stalling, with the potential for this to keep moving up for another month or two if it wants to keep doing that. And here's the resistances in here. All of these cycle peaks right there, those kind of line up with what I showed on the daily chart, getting up into the sixes. If there were a squeeze and really squeezing this, it could potentially could happen right now where it gets up into these sixes, sevens, or even eights, or it could do it out over here, which would be way out next year. Starting in April, May, June could be where that next big squeeze comes in there. So for right now, when you look at this, it looks to me like the best potential for rallies is now. If it doesn't happen now, it's not likely to. And then as you see right in here and here and here, you get into corrective phases that could last for a couple of months at least. So basically what we're looking at here is that as production could come online and the backwardation effect, it's actually not quite backwardation, I think they're pretty flat, the spreads, as those get back into their contango, then these prices will start to come down again. The spike available to continue right now, but then I think it's going to be setting back. So this big picture analysis really says if it's not able to get into those 6s and 7s now, it probably won't have another shot at it until springtime next year. So that's the big picture here looking at the natural gas market. I hope you found that very interesting, and for those of you that are playing the long side of natural gas on this big upside spike, it might only have a little bit of life left in it based on the timing that we see, but it certainly could get up to the 6s very quickly, $6 range plus for natural gas. And we've seen these things spike, especially natural gas, in these squeezes very fast and very big numbers, and that could happen, even getting it well past the $6.5 range in the next month or two. So that's natural gas. Let's take a look now at the big picture of the gold market. So let's start out looking at not that monthly, but switch over to the weekly chart, /GC. Gold has been extremely weak, and I want you to note in here the beautiful harmonics that we see here in the gold market. And what we're looking at now is that this flash crash, which occurred right over here, seemed to be meaningful. And I always wondered about that. If it would rebound, or always in the last month, would it then be coming down again? And you can see in here this big cycle that's joining up with all of this nesting. This dashed line is silver, and there is a big decline likely to come into November, December of this year, the way that aligns. Potentially even into January if it runs long. So this whole time frame that we're in is a period of risk. Let's take a closer look in here so that you could see our intermediate analysis here. And remember, this is a level 4 chart, and our members do get this and updated regularly throughout the week. And what we had said was that these resistance confluences right in here were likely to stop the rally. And man, it got right up there and nailed it up at that 1834 number that we were talking about, and then rejected and fell very sharply over these last 2 weeks. This period right in here of risk, and you can see the momentum conditions would improved and now turning down, go all the way out here towards the end of the year. It means that all rallies in here should be really held in suspicion when you look at that. I want to look at the monthly chart now and see how this aligns. The chart I'm going to show you right now is one of my favorite charts. That I love bringing this chart. I really like it. I essentially bring it for big picture timing. The chart is a monthly chart. I'm going to switch over from the natural gas to the gold market. A monthly chart that takes into consideration so much in the gold market. All of the Fed actions is what we're looking at in here and how it affected gold. Sometimes I overlay the dollar on here. I don't have that right now. But what I want you to see is the importance of the harmonic families in here. Here you could see these beautiful rhythms that go on in here. And I'm not going to tell you these lengths in here. Our level 4 members will get those if they request this chart, the monthly chart. And this is where the major lows came right in here. So when the Fed, went into a panic and Greenspan went into a panic, these are all the rate cuts that he did in there, and that set off gold moving up giantly from the 200s all the way up here to the almost 1900. So it moved up like 9 times during that period, and through all of these cues right over here, the gold market was super strong. Here's Operation Twist, and by the time QE3 came, the gold market was already in retreat. And you could see these cycles in here pushing down right there, 3 of them as this kept moving to the downside. So gold moving down right over here. I'm going to zoom in right over here because this is really the important time frame we want to look at. So what you're looking at in here is this period of not QE, where they were denying QE, and then this period in here where it's QE infinity. They're going to buy everything that they could buy for unlimited amount of time. But if you look over here in 2018, when they tried to cut back on their balance sheet and raise rates, the taper tantrum came in. And what gold did was fall pretty hard during that period, from $13.50 down over here to the 1100s, a $200 decline over what was about a 7-8 month period. Remember, we're looking at monthly charts, and we're looking at the Fed actions in here during this time frame. Now we're getting into this next period where the Fed is getting ready to taper. When I look at this, you can see that the chart in here is suggestive of the fact that this reversed already, and this rally phase right there has ended and coming down. The flash crash got it right down to that same low right over there, and now it's moving down again. That is likely to keep pressure on this gold market all the way into maybe the late summer or fall of 2022. So what I showed you on the weekly chart, well, there's another whole phase out there that it's likely to continue on the downside right over here. This chart right over here shows you the supports in here at about 1620 something, 1520 something. This is where those supports are right in there, and that's probably where gold is heading over the next 6 to 9 months is what it really looks like. So in my opinion, based on this charts and based on this great rhythms of cycles that we see in here, this period where the Fed is going to be pulling are trying to at least gain credibility by reducing their buying in Treasury securities and mortgage backs, and maybe even beginning to talk about rate increases. That's a period that gold is likely to have a lot of trouble. And you can see in here these 3 cycles coming down. That is a very risky period right there, just as it was right in here, and just as it was right in here. Note that this decline over here was from about 1,025 down to 680. So that was about 32% on the downside. This was only about 20% on the downside. And then we have this period right over here coming. This is not a great period for gold based on the background news and based on everything that we see in these technicals right now. So I wanted to bring that big picture because we get lots of questions about that, and I get a lot of emails about that also. Remember that the 4 charts I just sent to you are available for level 4 members only to be live on their Thinkorswim platform. So I'm going to tell you right now how you can become a level 4 member and be able to get these charts plus 84 other symbols that you can get weekly and daily analysis on, that I think is just phenomenal for your trade planning purposes. So let's take a look right now as we switch over to this special. Well, I'm going to show you the stock market in just a couple minutes, but first I want to show you what's going on right now in our level 4 trials. For first-time subs and for upgrades that are coming from some of the lower membership levels, you're going to get our askSlim annotated charts, our entire focus list. Those will be live on your Thinkorswim platform with all of our analysis right on them. If you're not a Thinkorswim member, go to the top of our main page, use the carousel and scroll over to where you can get to the Thinkorswim page and sign up. We get credit for that when you open a Thinkorswim account, and you'll be able to get our 84 different symbols. Plus, I'll let you know about special requests in a second. And that'll be live on Thinkorswim. You also will get live our option bias indicator, market condition indicator, and you'll get our special grids that have all of our best indicators on them that you can put any symbol in there that you want. You'll also get our trade ideas, which we put out at least one every day with a special video with instructions by Arvi, which is just phenomenal. You'll learn so much every day about our analysis, and you're going to get our Slim Ribbon PO and Reversal Scout. Just the Slim Ribbon and the Slim Ribbon PO, the best momentum indicators you'll ever see. And Reversal Scout, which we use on a lot of the charts, also is a great momentum indicator. And it's fantastic on the 15 minutes that are shared on the live stock index report. You'll get our special events, webinars, all of our trade planning services that we offer, best practices that you utilize all of the askSlim custom charts and studies. You'll be able to get access to all of that, and full membership access to everything else, level 3, 2, and 1. There's a special right now, level 4, 35% off. So you're going to get quarterly for $303.75. It's only $101.25 a month. For that 3-month subscription versus $159 a month for that. Now, if you are interested in getting custom charts, in other words, this is our special 84 symbols that we work on plus everything else. If you want to get custom charts where you can make requests of our analytical team, we cap this because we can't do this for everybody, and we only have 6 spots available right now. So if you contact Matt at askSlim.com, he will put you on the list for this. So this is an upgrade to level 4. It's called level 4 plus. You can ask for up to 2 symbols a week. That's 8 a month that you can get. It's your choice, and we'll do that custom analysis on anything that you want, other than leveraged. We don't do leverage charts, but all of the other charts that you have interest in, if there are cycle patterns on it and analysis that we can do, we're going to give that to you on your custom requests, and you're going to be able to open those up on your Thinkorswim platform. These charts include all of our cycle analysis, all of our timing indicators, key levels and projections, and full access to all of the requests from all the level 4 plus members. So they ask for it, we put it up, we post it on the site, we send it to the member, and then you have access to that. So you really need to become a level 4 plus member, and any general questions around trading issues, trade planning, chart analysis, all of that included, and everything in level 4, 3, 2, and 1. Special 3-month trial on this for level 4 plus, 35% off. That's $465 per quarter. That's $155 per month versus $239 a month regular. So this is the special hands-on service that we offer to you. And again, you need to be a level 4 plus member. Please write Matt at askSlim.com to reserve your spot today. For the level 4 membership right over here, you can go to the top of the askSlim page, and there is a link right over there, and you'll be able to sign up for the level 4. For level 4 plus, only 6 spots available right now, and then you'll be on the waiting list, which does move, and people have gotten on there through the waiting list. So please do write to Matt at askSlim.com for that special. All right, coming up right now is the stock market analysis. We're going to look at the S&P 500 short-term view, and I'm also going to look at the Dow Jones Industrial Average, which is throwing off negative warnings. Right now, the stock market under a lot of pressure and coming into an area of support. And we've had tons of people writing to me about the continued upward trend and about the fact that this is the support, and everybody's looking at the cycle counts and saying, okay, this is where the bottoming should be coming. And the general bullish attitude remains when we look at these charts. So we're going to switch over first, and I'm going to look at the short-term chart. That's not it. Little peek that you have right there on our big picture analysis on the gold market. Remember, that's a level 4 chart. I'm going to close that, and I'm going to go in here to the S&P 500 and move over to the daily chart. So this is the chart that the world seems to be looking at with this uptrend right over here, and this has our complex cycle structures on there, which have a lot of meaning. And you can see in here that the cycles on the bottom right there are giving you a good sense for the average 20-day length that is in there. This cycle bottomed on 21, 19, 23, and that low right over there that occurred a couple of days ago, 3 days ago, was the 18th day low. Problem is that right now the market is taking out that low and making a lower low. So what's happening is, I'm just going to zoom in right over here so you could see a little bit closer, is that this low right over here, which was right at that point, now becomes, and I'm going to change this right in front of you, and that is now 21. So we're now on the 21st day off of this low right over here. And we're still in the uptrend. So just a little lesson on cycle analysis. These are the ideal cycles. This is if it rallied up through half the time frame and fell through half the time frame with no force on either upward or downward. So it would be perfect up and down, as you see here. When the directional component or money flows through the principle of summation affect it, then it takes these cycles, and when there's an upward money flow, it changes the configuration of them, as you can see right in here. And you get messaging from that. The message that we're getting right now in this corrective zone, you can see positive, this corrective zone, positive, as it's still way above this low, is saying that the next cycle should be positive. Now, this is the midline right over here, and we'll be building the complex structures. But what I wanted you to see were these numbers were, because until I have the anchor point in here, I really can't build these, which we'll be doing for our members for the Future Speak show on Wednesday. So make sure you become a level 2, 3, or 4 member to be able to watch that show on Wednesday. This is very important, and this period over here is very important. I can tell you, as I said in the beginning, in the very beginning of the show, and that is that the obvious often becomes the surprise. And the surprise very well may be that there are aspects of this market that the market is giving us warnings that things are changing. You can see in here the slim ribbon PO on the bottom. This is the signal line, and that is goes along with the slim ribbon right in here. And this long-term momentum, this short-term momentum that we're looking at right there, has been in positive mode all the way back from way over here in May until now, and this is now turning neutral, as you can see right there. So that is a sign of some weakness in here, and we don't have the bottom in here yet. This could fall. Remember, this was 23 days. This could end up to be 23 days, and we could fall sharply into Monday and Tuesday and begin to threaten the warning number in here that would come at the 78.6 under 44.05. If it got down there, the probabilities of going to a new high would fall sharply. And so this is really an important couple days in there. And then this rally in here, the magnitude of advances have been huge once we get into the rally phases. So it has to prove that it has that strength. And if it fails in these resistance levels over here and then turns down and breaks whatever low it made in here, it will be signaling a major top. So these are really important charts to be looking at, and always pay attention to cycle patterns, momentum conditions, and how it acts in the support resistance zone, which we create through our swing high, swing low analysis. So we projected last Friday that the market would decline through Wednesday or Friday because of this corrective zone, these cycles coming to the downside. Starting early in the week, and this cycle may be shifting over a little bit, we will be looking for a rising phase to begin. And we would expect that rising phase to begin, let's just say Monday or Tuesday, and then be moving up for the next couple of weeks. If that was substandard, if it didn't get that far and turned down, it would be a strong message. If it blasted out on the upside and then, did the same big magnitude advances, then we would know we're still in this upward condition. The market's going to teach us over this next couple of weeks about its condition. But I want to go and look now at the Dow Jones Industrial Average, because while the S&P 500 and the NASDAQ and the Russell has improved in momentum on the intermediate term, the Dow Jones Industrial Average has actually weakened. And while these other indexes have turned neutral on the short-term patterns, the Dow Jones Industrial Average has now turned negative. So I'm going to switch to DJI in here, and I'm going to put on the daily chart analysis right over here. Where did I do that? Oh my. Maybe I wanted to go to the weekly right over here. There we go. So we're just going to focus on the weekly here, because for some reason I lost my daily analysis on there. What we're looking at are the harmonics in here on the weekly, and this is the beautiful chart in here on the Dow, which shows harmonics of 11 weeks, 22 weeks, and 33 weeks. And you can see that. So this beautiful, powerful cycle right in here on the big dominant cycle, and this very powerful cycle right over here. I want you to note that when it actually turns negative right over here, you can see it then really begins to struggle. Here it barely was even able to turn negative, and an early downturn, as you get right over here, shows negative momentum and the potential for a pretty serious decline coming out over here, which takes you out into next year. So this downward turn in momentum is very key. You need to get underneath this line right over here. That's at about 33,230 to be a significant breakdown. So it's a long way down. It's about 1,300 points on the downside, but that's the key. If it breaks there, you have a major top. The fact that it's rolling over already is a warning that we see in here on these harmonics. I'm sorry, I thought I had the daily chart to show you, but I actually see now that I didn't save that work. So you can see it here on the weekly right over there as we get that downturn in momentum on the Dow. And these, looking at this, I mean, these are really the giant stocks, the major economically sensitive stocks. You got to wonder if this is some signal that they're turning down ahead of the Fed. As we see that. Now, the Dow Jones Transportation Average is something I want to show you also because I think it's very significant. So I wasn't going to do that, but since I messed up the Dow Jones average and don't have that daily, I want to show you this. So you can see in here the green phases is where it starts the rise, and the yellow ones are where it goes into corrections on the Dow Jones Transportation Average. We talked about this rising and that the cyclicals may lead the way on the upside. That's now failing, and we're almost getting a breakdown right over here. That is extremely important when you look at that, and trading underneath this 14,140, which is not very far away, would be a breakdown and signal a large decline coming out into around February of next year. While I'm here, why don't I look at the daily chart right there, and I want you to see that this is getting very close to a lot of trouble, and that shows you that it actually has failed here in resistance and is looking at the short-term breakdown right over here, which is at 14,040 approximately, and that would give you a real problem. If it got below there, it would be signaling that that intermediate top is likely to come, and that gives you a sense that the stock market is not only has had a lot of correction already with 13% decline in the transportation average, but now is threatening a resumption in there on the downside, and a good likelihood, looking at this on the weekly, that it is going to break down, and that those very important stocks in the transportation average, because that's how the country moves, and also the big stocks in the Dow Jones Industrials look to be rolling over right now. And that is the warning to me that says that the signs are that there is a change going on. and that this upward trend that we've seen in the S&P 500 short term that everybody's looking at and seemingly is confident is going to continue, I think that's the warning that there's going to be a change in here. And yes, we're looking at a potential low early in the week and a rally for the next couple of weeks. If it doesn't get up past those resistances, if it doesn't make a new high, if the rally doesn't last as long and begins to move down and breaks the anchor point that is going to be created in the next couple of days, most likely, then you're going to get the message that something very distinctly has changed. And I think you would then have the warning to be able to act accordingly on your trading bias and maybe even your investment levels. That is Market Week, stock market view, the short-term view, and looking at the industrial average, the negative warnings that we see in there. I want to remind you to go to askSlim.com, explore that website, new member, become a free member. If you're on YouTube, subscribe to the channel, click that bell, and you'll be able to get our videos. Make sure you give us a thumbs up because you love this video, and watch our other member videos in the playlists here in YouTube. Twitter, follow me at askSlim.com, at askSlim, and for any information on all of the membership stuff we showed you, please go to askSlim.com or write to Matt at askSlim.com, and he'll be able to send you that information out there. I want you to be so unbelievably careful. It is so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been creating